Good morning, everybody. It's your boy TBT, aka the Brainless Trader, and today we're about to observe the markets, talk a little bit about some moves I made early in the London session yesterday, and see if there's anything said today with the news and whatnot that's coming up. But first, I like to pray. I am a follower of Jesus Christ, so I always like to kind of put myself in that mode. And as a part of that, I like to put some prayers on the screen for y'all to consider using in your own trading or just in your general life. Stuff that can help you out get through tough times and just refocus your brain on the things that you should be focused on. Um, so yeah, as we're walking through getting ready for today, just thankful, to be alive and be able to do this. Alrighty, if my system is working right, you should be seeing the trading hub pretty soon, if not right now. Waiting on a couple things to load up, I think. Uh, yep, looks like the stream is acting up. Oh no, y'all should be able to see me. All right. What's good, everybody? What's good? So, now that we're here, we got a couple things on my mind for today, so I'm gonna go over them. Obviously, I'm in the office early a little bit. I had to be here early, so I decided to go live. Um, so really quickly, let's go to check out the daily and just look at what's happened. So, if you recall, in one of my earlier posts, either I think it was earlier this week or last week, I talked about how when price started to come, I think we were right here last Thursday, last Wednesday or Tuesday or somewhere. I had a video here that I said I could see price potentially coming down and breaking this area. And if I said if price broke this structure, then that would give us some true, you know, thought process as to what could happen, right? What could happen potentially in the market. Um, and so this being a structure that could be considered a breaker, high, low, higher high, lowest down close candle is right here, just in this general area, right? This breaker area is typically once price crosses the breaker area, um, it's typically considered a market structure shift. Now, a true breaker, high, low, higher, high, just immediate, is this down lowest down close candle, and you got a fair value gap a little bit higher, but still across from the overall break. If you go with the two down close candles, you saw that price broke it and now has continued to break this entire structure. So typically, ICT talks about if a structure is broken, similar to this, he likes to look for a continued downside movement if price will allow it. And obviously, if you were paying attention to any of ICT's videos this month, he's talked about how May is typically a month that's bearish, right? May is typically a month that's bearish. And then the fall months after August, probably September to October, you get a lot of bullish movement. You get some back and forth in August and in November, but you get a lot of bullish movement because that's the seasonal tendency of the US dollar, right? All the pairs that are backed or compared to the US dollar, you get some of that type of movement. So, considering what has happened yesterday, I was able to take some nice trades in the early morning session. So, we can go over those really quickly. So, we're talking about GU right now. Um, I like to use these two Asian range indicators. Now, I don't use them to get into trades per se, right? I'm just using them to identify one, the 12 a.m. open, which is tabulated by my little thick line here. And then I use that in terms of ICT's Asian range sniper type of setup where you're looking for a price to basically cross the 12 a.m. open and essentially could retest on that 12 a.m. open. So without putting all the lipstick on the chart, you can just see that this is the 12 a.m. open, and if you just look straight across, price basically came up and retested it after crossing it. And this is part of the setup, but there's a lot more to it, right? You obviously, for me personally, I like to look for breakers, and I like to look first for a run on liquidity. So you have liquidity here, here, and here, right? Especially here, these relative equal highs, and price ran all of that out. Price ran all of those highs, and it ran it out into a PD array. So this would be considered the turtle soup type of setup, but I typically don't take the actual top of that setup. I would typically take, like, if the breaker forms and retests into that fair value gap zone, which we'll go over, um, then I would take that type of trade, right? Now you got a similar setup looking at it here today. You got price ran out liquidity into a PD array. There's a fair value gap. Price touched the PD array, the fair value gap, and now it's moving down, right? And this is also a breaker because it's high, low, higher, high. I bet you we could find. Oh, no, it's not. Is it a breaker? Is it not? Let's go to the lower time frames. Yeah, not as much. Not as much, but you do have a fair value gap in an order block at least on the 30-minute chart. So if we put all the lipstick on here, let's go through the previous trade, and then let's talk about how this is like the exact same trade and look to see what kind of targets could happen today. So you've got price running out liquidity, right? Price ran out liquidity, all this, ran it out, ran out all this, ran out all this, but did not finish above this fair value gap zone. I typically make my fair value gaps yellow until I see if price is going to react to it, and then I would make it green once I know that, hey, this is it's a nice fair value gap. This is a valid fair value gap, and I'll explain what I mean by that. So um, when we look at price and you're looking at a potential ICT turtle soup or just a run on liquidity in general, right? You're looking to see if price is going to finish around the midpoint of that fair value gap or PD array that you're looking for it to run into, right? Typically, a turtle soup type of entry is when price runs liquidity into a order block and fair value gap, or into an order block, or into something, right? This is a 1 hour fair value gap. You see it tabulated here. Let's just show it a little bit clearer. This wick to this wick. There's the gap. Now I'll use my fib just to get that 50%, the halfway point, which ICT calls the consequential encroachment, just means the halfway point of that PD array. So I've got that here, and if you look across, price just barely finishes above it, right? You could say it finishes pretty much in the middle of this fair value gap. So after a run on liquidity and price finishing, in the midst of, it could finish anywhere in this fair value gap, so long as it doesn't close above this fair value gap, this closure and this opening, right, stays even, within the fair value gap. Now you're looking to have a potential bearish setup because you're already bearish, right? You knowing that you're running liquidity in this direction, you knowing that the higher time frames say, we're already looking bearish, right? Because we've got this structure that we already outlined, right? You're already looking bearish. So going back to that 30-minute chart, you're looking to see, all right, now what other confluences can I add to this to make it clearer that this is a trade that I should take, right? This is a trade that I could take. Not that you should take. You don't have to take any trade, right? But this is a trade that I could take. So now once we have all this, we know where we're at, right? We know that we have a run on liquidity. Now we're trying to identify if there's a breaker, right? So if you go to the lower time frames, you hit at the 15-minute high. Let's just take all this out the chart. There's a high, there's a low, there's a higher high. The breaker is formed on the run on liquidity, right? You could also say high, low, higher, high, but which one do you want to use? Just depends on where price is finishing, but typically I will use the one that has a fair value gap across from it. Now they both do. High, low, higher, high. This is technically a breaker. Fair value gap across from it, right? This is a much less high than this, but it's still a high, low, higher high, lowest down close candle, considered a breaker. Now, price didn't trade back up into this, right? So you may not have been able to catch that type of entry because price didn't really go back up into that entry. But price did come back into this breaker here. So if we take the lipstick and put it on the chart, now you have a 5 minute breaker, right? We can turn this off so that you can, we already know that this is the Asian range. Oh, not that, this. I already know this is the Asian range, right? And you're looking at this 5 minute breaker, right? Yep. All right. Now, price lowest down close candle, lowest down close consecutive candles. Um, ICT talks about how you can use either or. Um, Typically, I like to use something that's either the length of the fair value gap or just that makes sense to me. If there's two, I would typically use both of them. Um, it gives you a little bit larger zone, but regardless, I'm trying to look for the fair value gap, right? I'm trying to look for the fair value gap that's across from it on the 5 minute. That's the fair value gap. On the 15, I believe the fair value gap is a little bit smaller. Oh, where are we? Yeah, it's like, where did we go? All right. Yeah, why is this fair value gap looking like that? It must have been a much lower time frame fair value gap. Let's see. So I did not label it. Yeah, that's a 3 minute fair value gap here. So there's multiple fair value gaps, multiple confluence. Let's just talk through how do you navigate through if you got all this going on. So you already got the running liquidity. You know that you got the higher time frame. You know the hour chart fair value gap up here. That price didn't close past on the higher time frames, and now you're looking to this breaker. You got this breaker that price basically comes up into. That is a potential entry right here, right? Um, and that's why here you can see that I took this trade. I saw price trade up into the breaker zone, these blue lines, and there's a fair value gap here, which is a 3 minute fair value gap. Now that I have that, I need to label it. And so we're going to talk about some mistakes and some successes and things that you can learn from 3 minute fair value gap. Okay. So you got a 3 minute fair value gap right here that price trades all the way up into, doesn't close past it. So in my thought process, I was thinking, well, this might be the move. Now, mind you, you're running off liquidity. This liquidity sell side is ran off. You've already ran this one, and now you've run this liquidity as well. And you're then coming back into the breaker and this 3 minute fair value gap. So my thought process was, shoot, price is looking nice. I might need to take I might need to take this, right? This is the old fair value gap, and we can talk about how this old fair value gap plays into this as well. Um, we'll do that at the end. So I took this trade thinking that price was going to continue down, but a lot of times after price runs out liquidity, especially a good bunch like this, is going to pull back into a PD array, which it does. It pulls back into this 3 minute fair value gap again. Now, this is the second time, one, two, that price pulls back into a PD array zone, right? So a lot of times I still say, hey, if it pulls back into this twice, if it pulls back into this 3 times, that's different, right? This is a different scenario. Twice is okay. 3 times, like for example, this is 1, 2, but if this price came all the way up here, as it's coming up, I'm thinking I'm not trying to take a trade, right? I'm kind of thinking that this trade is invalidated because this is the third time it's coming back up to that zone, which means it's got an affinity for that area. It might want to go the opposite direction, but we only had two, right? So I got in here, I got ticked out around here. I think I had my stop set above a lower time frame. I think I had my stop set above this fair value gap here, right? There's a order block, uh, these two consecutive up close candles, and then there's this fair value gap. So I was thinking, set your stop above here, you'll be fine. I got ticked out, so I waited. I wanted to see if it was going to hold around this zone, right? And now this is around 435, around 5. That's pretty much the end of um, my personal like time frame kill zone that I like to look at within ICT's framework. So ICT's kill zones are for a London session, I believe 2 to 5 a.m. Right? But obviously he talks about how you can be holding or into a trade, entering a trade at any time, between the London session and the New York session, or it could be after that kill zone. It just depends on what price is doing, the news and all that stuff, right? So, me personally, I like to see this, right? You see price heavily come down out of that fair value gap zone, still retesting that breaker, not going too much into the zone or the breaker, right? The fair value gap or the breaker zones. So that's why I took another entry here. Now, I did not get a chance to continue to watch price after that because I had to go to work. But what happened was price ended up going in my direction. I put my stops right above here, actually above the fair value gap zone, just to be safe. And price ended up, respecting this area and really running. So you saw that I basically didn't get a chance to take profit until here because I wasn't able to actually like open my charts. I had meetings and whatnot, up until about 10 a.m., 9, 10 a.m. when I was able to look at the chart. And I was like, okay, let's go ahead and take profit here. Cool. Now I took another trade here, hoping that price would continue down into this sell side liquidity, but it was pretty much done for the day around 11, which is pretty standard. You don't want to be taking additional trades in Forex, close to lunch typically, because a lot of times that crossover between London and New York is going to be your best time to get into trades, or even just London in general, which is where I entered. Now, obviously, today we've got a similar setup, right? And we can go over that next. But I just wanted to show proof of concept for the ICT breaker and as well as the just general run on liquidity turtle soup type of setup because you could have, I keep doing this, you could have entered trades right here. Honestly, if you really knew what you were doing, right? Um, if you're looking on the higher time frame and you're like, well, that's a run on liquidity, you know, let's put these back here so we know what we're looking at. Dun, dun, dun. Where are we? I think we're over to the right. There we go. So if you're looking at it and you're seeing that this is a run on liquidity, and you know that this is a order block for a value gap. I don't even put the lines for my order blocks anymore. I just know where they're at, right? But it's something that you could potentially enter here, right? Now, the safest way to enter, to me personally, is just waiting for the breaker to form, because then I can get into those entries and I can navigate. You're still going to potentially get ran out of, price going to might run your stops. You got to just stay with it and see what's going to happen, right? Now, what we have now is prices ran out all these zones of liquidity, right? I can take them off my chart because prices ran through them. And I want to show you on the higher time frame what you can look at as far as another confirmation, right? So you've got this hour fair value gap over here that's green. This is from a previous price run, right? This is not from this current range. This is from a previous range. But you see how when price passed it on the other side, it essentially rebalanced it perfectly right here, right? Now it was already made efficient by price coming back up into it, trading and going the opposite way. But if you leave it on your chart, sometimes you won't be able to find confluences like this where you see price basically completely rebalance, trade within it again, and then on the other side of it, it retests right and continues to trade the opposite direction. So not only are you looking at it from a turtle soup, from a 12 a.m. open, you know what I'm saying? Because if you look at the 12 a.m. open, my 12 a.m. open is here. Let's make that line just slightly thicker because it is skinny than a mug. All right. I have my 12 a.m. open here. If I were looking for 12 a.m. open entries, what happens? Price basically retests my 12 a.m. open line here, right? So if you're bearish, you're looking for entries above the 12 a.m. open, technically, right? So did I get that? I don't know if I actually got. So technically, did I actually do it? Technically, I got entries above the 12 a.m. open. So this could have been a thought process to me as well. Like, okay, we're below the 12 a.m. open. I entered my first one here. Maybe I should wait to see if price will retest this area. I took it because price already traded back into the 3-minute fair value gap and the 5-minute breaker. And so I'm just thinking, okay, how much more confidence do I need? I know I'm in the right direction. Let's just take a lower lot size trade, see what we get, and then we can adjust. So we get ran out, but then you get back in it. because you still have this is the second touch to the zone. Not only that, but then you're basically coming back to retest that 12 a.m. open line and all that good stuff, right? So there's just different ways you can look at it, but it all starts with the running liquidity. It all starts with the running liquidity into a PD array, fair value gap, and order block, right? There's an order block up here if you're looking. Let's go back to the 30 minutes. Why does it keep taking me so far to the left, bro? I don't know. Um, so you're looking, this is a order block here, highest up close candle. I mean, honestly, you could say this is technically the highest up close, but if you're looking in this range, right, this range of price, this is the highest up close candle, and it's across from the fair value gap. So that's I like to, not me. I mean, this is taught by ICT to link your order blocks with your fair value gaps, right? So this is the highest up close candle. I wouldn't use all of these because this is the one that's across from the fair value gap. If you're looking at the 30-minute, you have the hour fair value gap there, but then this is basically the same candlestick, right? This is the 30-minute. It's basically the same. I mean, it's obviously two of these just makes up an hour, but I mean it's basically the same length as that 1 hour because you got the wick for that one here, right? So, anyways, if I had my order block tabulated here, I like to put them in orange. Was that red? It's kind of a reddish orange. I don't know what that's about. Um, you got your hour or order block, right? Aligns the low aligns basically with the midpoint of that fair value gap. It doesn't have to do that every time. It's just order block is across from the fair value gap. There you go. Running liquidity, you're starting to look for your entries to the sell side because you already know you're bearish, right? Now, the actual execution of this takes time because you have to be patient with getting your stops ran, right? Sometimes your stops is going to get ran. And so it's just one of those things. But now if we look to this day, right, we can take all this off of the chart because I've talked about this multiple times. Um, yeah, I don't think I need this fair value gap anymore either. It's just so much on the chart. It's just so much. I like to use it when I'm actually trading, but dang, like afterwards, you're like, bro, this is a lot. So right now we're looking at a similar setup, but the question is still, where does price want to go, right? That's one of the questions that ICT has been talking about, us needing to be able to answer before we're getting into trades, understanding where is price likely to go. The most recent low, because prices basically ran out all this liquidity already, is this, right? And if we zoom into here, we can try to see if there's any fair value gaps and things like that that price could target. We should go to a higher time frame just to observe what all is truly there. Takes me so far left. All right, there's a fair value gap, 4 hour fair value gap, which price is pretty much already touched, if I'm being honest. Yep. And then there's just this low. Are there any fair value gaps? Just lows. Just lows. So we'll just tabulate this as sell side liquidity, and um, we can now try to see what today could hold, what today's setup could be. Right now, let's take note of this sell side liquidity, and then we can look at some news to see what is going on in the market with the news. Sell side liquidity, no end. And then let's just do the same thing. I don't think that we're gonna get all of this. Oh, Bible verse for you. Here you go. Give me that. All right. I don't think you're gonna get all of this today, right? Like this is a lot. This would be a lot. These are relatively equal lows though, so I kind of like this. And then there's a fair value gap right there. So when you got relative equal lows and you got fair value gaps, price often will target those as well. And I'm talking about both fair value gaps, relative equal lows. You got another fair value gap to the bottom side here, right? I'll just put it just because like there. I don't I can't say for certain if price is gonna come and touch it. They're approximately the same, right? You got more. I'll just go ahead and do the whole shebang. Got more relative equal lows here. And it's a fair value gap, but I mean, shoot, if it gets all the way down here, like, we're already crumbling. This is the ultimate sell side liquidity, and then you've got many, many more. But I mean, I don't know what's going to happen. Let's just talk about today. um, so today, what we already have setting up is that similar turtle soup type of setup, right? You got liquidity, relative equal highs right here. Buy side liquidity, buy side liquidity. Prices ran it out. Now, think on the 30-minute, we had a fair value gap. There you go. So you have a fair value gap. Not only do you have a fair value gap, which it didn't necessarily touch it, and that's what I have to do over here. I think these are 4-hour fair value gaps. Yeah, I need to make sure that I have those, because then I'll be looking for the darn, like, the time frame, going through every single time frame, trying to figure out which fair value gap, which chart did I put this on. I just need to. I know it. I don't know what this was. This is a daily or something. Yeah, I have daily already there. So we have a similar opportunity today, except liquidity, sell side liquidity is not as close, right? Um, we have to look and see in this area what is closest. You have fair value gaps here as well. So we have to find out for ourselves, like, okay, what is really going on? Here's a nice little fair value gap. Let's look at the hour. Hour chart, hour chart. What do you see? Now, a lot of times ICT, not a lot of times, he has told us specifically to pay attention to the fair value gaps, the PD arrays that happen within the actual kill zones, right? Within the Asian or within the New York or the, actually, let's just put it on. Yeah, within the New York or the London, because those typically are the PD arrays that are a little bit more strong, right? Um, so if we're looking for fair value gaps in this area here using this indicator, which is not an indicator for actually entering trades. This is just informational. Okay. If you like to use indicators to enter your trades, that's fine. I don't, but I do use them to give me an understanding of what's going on in the market as far as information, right? I have the Asian range. I know where it's at. I can just see it. If I don't have it on there, like, I gotta go and look at the timestamps to figure out, oh, is this bar in the Asian range? No, it's not. I don't know. This tells me, okay. Same with this 12 a.m. open. It tells me right there at the end, this is my 12 a.m. open. It's easier for me to identify. Obviously, you see that I'm using ICT concepts to get into the trades, which I believe is the best way to go for me personally. You do it how you want to do it. I'm not telling you what to do. Just telling you what I do. Now, looking at this area is within the London to New York session. So I'm looking for the PD arrays that are in this area, and specifically, there's a low, but I'm looking at this value gap. This is one, but this is the one that's across from this order block here. Lowest three down close candle. So I think I'm going to choose this one on the hourly as a potential fair value gap type of target, and then we can turn this off because good grief, it's just so much color. We'll turn these back on, and then we can drag this across to where we're at today. So let's talk about today. What could potentially happen? If you have a fair value gap like this that has an order block across from it, you likely price will come into this area and react in some type of way before it actually gets to this low. So that's why it's important to actually put these on your chart and understand where they're at, because sometimes you may get some sort of reaction off of them. Price may even stop and go the opposite direction. And if you're not paying attention, then you would get caught up in, dang, I should have took my profits here. So this would actually be, aside from this low, you've got, let's just talk about it. If we're looking at that same type of turtle soup movement, turtle soup, I was just saying, let's just look at the run on liquidity, buy side, run on liquidity. Let's go to the 30-minute. It looks a little bit cleaner. And you got the 30-minute, did I say it? Jeez. The 30-minute fair value gap, right? And you got order blocks. You got this order block across from it, right? Let's just put it all on the chart so you can see, so I can see, shoot. and let's make sense of it, right? Two consecutive up close candles. I will take that as my order block. Now, you already see that from the day before, the trades that we already entered, price also had a fair value gap here, right? Which it moved into order block fair value gap and ran off, right? This is basically yesterday. So this is an entry as well, right? You're downstream of the breaker, which we on the lower time frames, high, low, higher high, lowest down close candle, breaker, price trades up into it, runs off, order block, fair value gap downstream of the breaker. This is basically another area of distribution, right? So you got the breaker area, that's one leg of distribution. Let's say that you could probably say that these two are around the same, right? Like this, even though they're two separate entries, they're like around the same areas as far as like if you're looking market maker model, first leg of distribution, second leg of distribution, like these two are around the same. They're both like first leg, like they're in the same area. You feel me? Price just gave you two chances to get in. Here, you're looking at a second leg because you're much further away, and you're trying to see if you have a second leg of distribution where you should be looking for specific liquidity, right? Which is why I have the ultimate, the next level of liquidity is really this low, but then you've got the fair value gap, which price also likes to target. Then after that, you've got this low, right? It's just super far away. You're probably not going to get there today, but today, potentially, this fair value gap is a nice target. Now, let's talk about the Asian session and using the 12 a.m. open. So the 12 a.m. open was here, right? Now price has gone against, right, opposite of the overall trend in the early session into, almost touching the fair value gap and the order block, but not being strong enough to even touch it, right? So now we're like, okay, we're still looking bearish, right? With the target of the fair value gap, low hanging fruit, fair value gap below. Now, this is really the first target, this low that it's already made, right? The fact that you had this run on liquidity, you could enter a trade right now and put your stop above here, right? If you really wanted to, right? You could enter a trade and put your stop above here. So one thing that I like to do is if I'm going to do that, it's going to be a low lot size, right? It's going to be let's make it a one lot. Let's just see how it looks. Okay, you got that. Okay, so that's your turtle soup entry. Okay, cool. You put your stops either at the most recent low, that's 30 pips. That's enough for a nice day's meal. Okay, it's $300. If you're just starting out, you make $300 in one day. As a trader, I remember in 2018 when I was starting, I was like, boy, if I can make $300 in a day, Lord have mercy. What? So you gotta look at it like that. You'll get to the big numbers later. And you look at 30 pips, if you have a 10 lot, 10 times that one lot, you're looking at $3,000. $3,000 in a day. Thank you, Lord. You feel me? So it's understanding how to look at it though. It don't mean you're gonna be right every time, but you want to be on the most likely side, right? Right now, we're bearish. We have already ran out liquidity in the early morning session. We've already kind of almost touched, but price is too weak to touch this fair value gap zone. I'm gonna take the executions as far as like how far it extends and just make it over to the right because it's messing with my lines. And now you're looking at a nice turtle. This is a nice turtle soup entry. Okay, you've got a 25 pip stop loss, potential to lose $250. You're basically 1-to-1 risk to reward ratio. You feel me? Okay, that's okay. Now, what's better? Digging into the lower time frames to see what can we find. Is there a breaker here that would allow us to have more confluence on this trade and potentially make a larger trade? Now, mind you, I said before, if we're looking at the market maker model, right? If you're looking at ICT's market maker model, you're looking at a run on liquidity. There was a breaker here, market structure shift, essentially in the lower time frame, although we're still majorly bearish in our bias. But you got the first leg of distribution. These are just this is two different entries. They're about the same leg though. They're in the same area, first leg. This is the second leg of distribution. Okay. Now, what ICT talks about in his second leg of distribution is that when you have a second leg, that one typically runs directly to the target. We have targets listed here below. Fair value gap is my first target, and sales ultimate sell side liquidity. I mean, that's going to be over 100 pips, right? Almost 100. Got 80 pips. I believe this is a nice day's work now, but we have to understand what is going on in the news, right? So let's look at the news. What's going on in the news? Let's make sure that this is properly shared. I'm looking at my stream here to make sure that my news actually is shared. Yeah, I believe it is. So we're gonna just talk. So today's what? Thursday, right? You got the 8:30, around 8:30. This is when stuff is gonna come into the market. So you also have Fed speeches at 10:30. So price could get wonky. It could get weird, right? Even though we have our all of our whole setup and we have everything, it looks so perfect. But the move could get skewed just because of the fact that we have the Fed talking. Now, the Fed this is not the main, this isn't the main man. This is just Susan Collins from the Reserve Bank in Boston. And then who is this? Mr. Barkin. Thomas Barkin. This is the Reserve Bank in Richmond. Okay. But these guys aren't the major. This isn't the major player. And this isn't FOMC minutes either. So this is still potential for high manipulation, but it's less likely. Now you obviously have this super red gross domestic product. We're not fearful as much. We're just cautious. Okay, you have initial jobs claims, which can be pretty volatile too. Chicago Fed national activity. I don't know if I care too much about that, but it says it's medium impact news. So hey, we're paying attention to all of it. But if this was FOMC minutes, I'd be more concerned. If this was Governor Bailey, I'd be more concerned. If this was last week, I think we had the actual president of the United States Federal Reserve Bank. Let's go to, I don't care. I don't recall what his name is, but um, Powell. If you see his name, then you really want to be looking into what's going on, right? But we have this. It's not nothing. It's not nothing, but it's not something to be too concerned about. You know that regardless, price is going to have some sort of reaction to these. Okay, so then when we go back to our charts, we want to see, okay, what can we expect? What we can expect is manipulation as far as potential runs actually into this fair value gap, which is why the initial entry is low, right? You want to see what's going to happen around that 8:30 time frame before you truly enter into large lot size trades. Okay. Um, and typically you want to still be using your risk management because you shouldn't be using a lot size larger than your normal, you know, whatever it is you're using to build into your trades. If your maximum lot build is like to 5 lots, then you're like looking at a 2.5 your first entry, maybe a 2, maybe a point 0.5 after that, or maybe 3 lot and then 2 lot, or 3 lot, 1 lot, one. I mean, whatever you want to do. Um, so right now, considering the fact that we have what we want as far as a run on liquidity, price is too weak to touch this fair value gap. Excuse me. It's a 30-minute fair value gap. Let's look on the lower time frames to see if there's something, if there was a fair value gap here. No. 3-minute. There was a small fair value gap here. Is a small fair value gap here. But no, I wouldn't trust the 3-minute fair value gap so much as I would trust the higher time frame. When you go back to the 5-minute or even the 15, you can clearly see that there's a breaker here. All right. High. Oh, no, no, no. That's not what we want to see. Let's go to the 5. All right. That's more like it. Okay. You got a high, low, higher high, lowest down close candle across from the fair value gap. This is a 5-minute breaker. Okay. Now, price is currently trading into that breaker and fair value gap zone. All right. So we have to be mindful of that. Now the 15-minute fair value gap is a little bit bigger. And okay, this is what I was trying to see. On the 15-minute, it's the same breaker, right? But it's high, low, higher, high. That's what I was trying to understand. Breaker. So I'm gonna put on the 5 is a little bit more clear. I like this lowest down close candle because I could use consecutive, but it doesn't really run into this fair value gap. I want to use the lowest one because this is the closest to it being across in the fair value gap. And the reason why I'm doing that in my brain is because let's say price like runs past this breaker, this fair value gap zone, and then past this little breaker zone, this lowest down close candle that I'm gonna put here. I might have a little bit more caution about my next entries, right? Because I would want to wait and see what is price gonna do, right? So that is, and this is really nice. So depending on what happens here, I would be expecting price to hopefully close, staying within this fair value gap. Let me say this is a 5-minute breaker, and then this is a 5-minute fair value gap. 5-minute fair value gap. So now let's talk optics. We're currently about to be in the kill zone for the New York session. So we're not quite there yet, and we still have that 8:30 news that's coming in, influx into the market. So you're an hour before any of that. You typically don't want to take an entry. Now, the turtle soup entry is always going to be in between. Usually, it's going to be in between the kill zones. Like, sometimes it may not. Sometimes it may be perfectly, where it needs to be. But that's why you have your stop set above, which what you hope is the high of the day, considering that you've ran out liquidity. But at worst comes to worst, that price could potentially run truly into this fair value gap, which is I think is an hourly fair value gap, if I'm not mistaken. Now I'm gonna have to go back here and make sure. Oh, it's 30-minute fair value gap. Okay, so it's a 30-minute fair value gap. Worst case scenario, you run into that, and then you get a breaker formation because you didn't really truly run into it, right? So this whole area could potentially be, if price runs into it, this whole area could be the second leg of distribution. Regardless, you have a nice potential setup with relatively equal lows for a low hanging fruit type of target for today, right? In GU. Now, for more, you would hope potentially for price to continue down from where you entered to give you that nice 50 pip and touch that fair value gap. The fact that this is 50, 60 pips on GU, obviously I know GU can go much further, but the fact that this is 50, 60 pips, you've entered above the 12 a.m. open, your stop is above what you hope to be the high of the day. You know, in my case, I'm about to go to a meeting at 8, so I won't be able to watch the charts, right? But my entry is a one lot. It's if I lose 250, it's not terrible compared to the account size, right? But if I win, then I've got $500 potentially, $300 potentially, and it's cool. Regardless, I'm learning still. You're always going to be learning, right? Regardless, you're always going to be factoring these things in to your equation, right? So right now, I will be watching for the next 30 or so minutes. What price does in this area. Is it going to close above it? Is it going to run the stops here, my stops here, or is it going to give me truly what I want? And right now, this is the 15-minute chart. There's 6 minutes left, but you can already see it kind of reacting off of this area. This may be too small of a breaker, right? The 5-minute breaker may be not big enough. This fair value gap, may not be substantial enough to actually be used. We may be too early, right? It's 7:30, 7:20. We may be too early to be truly trying to get into this trade, aside from the fact that we're thinking this could be a turtle soup type of entry, potentially putting your stop above the high of the day. So I'm comfortable with that thought process and the fact that this technically is a breaker, right? But you still want it to be validated. You still gotta see it move in the direction that you want. Doesn't mean that this can't wick out, right? This could wick out and then come back down. At which point I would enter a slightly larger lot size since this is kind of a probe, right? I would enter my true, 5 to 10 lot, try to build that in if this were to wick out. And that kind of shows me that that energy that's already in the market, if this were to wick out to the upside and give me a like nice large wick and then close, you know, below this fair value gap zone. But we'll just have to wait and see. But yeah, I'm just gonna observe. I've been doing a lot of talking. Oh, I just wanted to get on here and you know let you see what I'm working on for the morning. Um, in other in other pairs, let's compare this to the DXY, and let's just go to a higher time frame. So the DXY currently is pretty pretty up there already. So this is one thing where you're looking at, okay, the DXY should also be matching to an extent. Oh, is this two fair value gaps in the same area? It certainly is. The DXY should be matching to an extent the uh price action on the other side. The only confluence you kind of have here, uh the other concepts that you have here that you can kind of look towards is the fact that you have this fair value gap that was inefficient, right? It was a gap and inefficiency in the market, but now has been rebalanced. It's been traded into, traded back to the bottom, and traded past, right? So that's confidence as far as just, are we going to continue to get bullish movement? Hopefully, you know, hopefully. Um, Now, I would, if price was coming out of something like this, then I would be a little bit more positive about it. Um, your next, fair value gap is about right here, and then you've got the high and the high. So, best case scenario, you run out this high, but that would mean price just keeps going up. Likely not to happen, right? I mean, you might more likely to get something back into this fair value gap zone and then up again, right? So that is where I say, with this entry, you're kind of looking at a potential to run these stops, right? You're looking at the 4 hour, you're looking at a potential to run these stops here, run this high potentially if price were to kind of go down in the DXY, and a true run into what you hope to be, a stop here, like the order block, bearish order block in the fair value gap zone up here, which could give you, what you need. And this is actually a 30-minute. What I have up here, all these. No, this is like a daily fair value gap. Yeah, sometimes all the lines is a lot, bro. And not gonna lie. Okay, we do have it as a 30-minute FPG. I was like, bro, what's going on with this? All right. So yeah, that's what I'm looking for. And then in GJ, what do we have? I was not trading, have not been trading this pair just because it's been a little in a chop, to be honest with you. I said that in my latest video. Just look at this, bro. It's just, you don't want to be entering a trade in this. It's just back and forth, forth and back. Like, you could enter a trade in this. Like, I would be more confident if price like ran out all this beautiful sell side liquidity that people look at as support and then went up. It's as opposed to taking this trade right now where you could make a case for like a breaker here. Like, you could always make a case for a breaker if you find what you need. Um, let's go to the 15. Now, I'm not a proponent of taking this trade. I'm just saying, there's little sell side liquidity here. Price ran it out. Low, high, lower, low. Highest up close candle. Could be the breaker candle, cross from a fair value gap. Price comes into it, right? But it's not really substantial to me. So I don't trust it. I would much rather price like run out all of this. Just give me that support zone here. Give me those people's money and then go in the direction you want to go. So I am not pro GJ right now. Gold, we had on the higher time frame a similar thought process as GU, which is actually kind of playing out. You had higher time frame breaker, high, low, higher, high. This is technically the low, right? High, low, higher, high, but lowest down close candle is this candle here, full length, wicks and all. Price has been trading into it and hasn't touched the fair value gap. If you look on the lower time frames, you got price. There's got to be some sort of fair value gap here, or something that price is kind of touching, because otherwise you just got like a order block. I've been trying to learn more about gold, um, to be able to actually take trades in it. All I really see here, as far as a fair value gap is concerned, I don't see much. Let's go back to the 2 hour. Okay, there's like a super small fair value gap right here. You know, super small. It can be small, it can be big, it doesn't matter. But obviously, I like them to be a little bit sizable, just so I have a little bit more confidence that, hey, this is something that price is looking into. Super small, price hasn't closed above it. This is an order block here within this zone. Highest up close candle, order block, 3 consecutive. About the same zone as the fair value gap. You know, it's also in line with the daily breaker. My, obviously you don't want to be taking a trade down here, right? If you're gonna go back to the hour and put your Asian range glasses on, you can see the Asian range is here. Can we get the 12 a.m. open? We don't have to put the line there. The 12 a.m. open is where my stuff ends off. This is 12 a.m. Price is above it, but it's not really pulled into a legitimate. Like I would say, like this breaker, high, low, higher, high, lowest down close candle, cross from this nice fair value gap. If price went up in here and then rejected and ran off, I like that more as an entry for gold than I would like to enter anything right here, because you're just kind of waiting for price to factor in this news. But I think that's all. Oil, I'm just observing. I don't really have too many opinions on it right now. It has pulled into this larger time frame fair value gap. If we're looking on the hour chart, it's literally like the size of a entire price range. But if we look on the 4 hour, this is a nice area. It's a nice fair value gap. Is it smaller on the 2 hour? It's the same size. Okay. Um, So, we could have this here, and I'm trading oil now just because one of ICT's traders that had an interview with him talked about it, and I was like, I never really thought about oil as a good pair to trade ICT concepts, but just from an order block um, fair value gap standpoint, it looks like it's got some nice opportunity here. I'm not saying take it. Order block fair value gap touches the order block. Is this the midpoint of the fair value gap? I don't know. Is it? Is it? Is it? Is it? It's just above the midpoint of the fair value gap. But I mean, hey, what more can you ask for? It's pretty nice. Let's get the dotted lines here. I like them. All right. So you got that. It's closed just about the midpoint, and now you're coming down. I mean, you could take a low. I might take a low. All right, what's that going to be as far as? Let's see. No, ticks. You probably looking for like 750 ticks. You're looking for 300 ticks. Let's just do 300. Let's do 700 ticks. $700. Okay. $7,000. Okay. And then let's do two, 300 ticks. That's $3,000. So if I wanted something in the middle of this, I would need like 500 to give me something more thoughtful. Okay, and even that is like way too. I would set my stops above here. That's only a $1,000 potential loss, and my take profit would definitely be like just like right here, like 76944. This is like the last of these lows. You got, you know, low, low, low. Be looked at as a inline phantom. Let's bring out the retail trend line. Oh, it looks so pretty. Yeah, that's a nice trend line phantom. Okay, so we got trend line phantoms in oil. Now look, this oil trade is a completely demo. All this stuff is demo. I'm just practicing. Like, don't think I'm not trying to give no signals. I'm practicing on myself. I'm practicing live. This is gonna be the next step would be trading live. But if I'm gonna trade live, I gotta practice live. But even still, I'm trying to practice. Why I say trend line oil? Even still, I gotta practice. Good habits in order to be successful. Make sure I don't got no meetings right now because I know my meeting was supposed to be at 9. I think. Yeah. Yeah. So your potential profit, you're looking at a 1-to-1, right? Looking at a 1-to-1, just order block fair value gap. Um, but yeah, it's getting ready to be about that time that people come into the office. So I am about to sign off. Just wanted to give y'all my thoughts on all the pairs that I look at. It's only a few. It's truly, really, it's like two. It's like the ones that I'm really serious about, or I guess you could say it's two and a half. It's GU is my main pair, and then GJ is my half pair. I like specific setups off of a run on liquidity in a clearly formed breaker for GJ. Oil is the one I want to get more serious about, only because I believe it's going to offer me some solid opportunities. This is a 4-hour setup, right? If I was on a 1 hour, I'd be looking at what? Yeah, don't know. This is more of a higher time frame type of setup, honestly, which I like. I actually do. I don't normally trade higher time frame setups, but I mean, it is a higher time frame setup with not too bad of a stop loss and take profit. If you're looking on a daily, you know, price has run into this fair value gap, you know, and order block zone is only closed at the midpoint of the hourly fair value gap on the daily chart. So it's not bad. Not bad at all. But yeah, this is just the oil is really the one that I'm practicing on, trying to understand how these entries form and what PD arrays and things I can use on it. Um, in the top right corner, I look at prayer first, which is just me getting myself in the right mindset with God, which we did at the beginning of this video. The crux is what I look at as far as this is the area or the block fair value gap. Here's an example of the crux. This is the most important area. If you look up the definition of crux, I think crux definition is the decisive or most important point at issue, right? So it's just for me, it's the most important area. And I just like to use that term, the crux, because that's where I want to be entering. I had used it just being funny with myself one day. And then I was like, you know what? I got to look that up. And it's actually a legitimate word. So the crux is the most important area in terms of Forex for entry or in terms of trading is where you want to be entering the trade, right? So let's move this over and let's check my calendar for today. Let's make sure we're on the same page as what needs to be done for today. Yes. Okay. 9 a.m. straight. Now, back at the crib. All right. Why she put that meeting on Friday? I don't know. All right. And yeah. So that's my thought process for oil. Looking at a higher time frame setup. This could be an hour setup. If I'm looking at the Asian range on the lower time frames, well, actually, let's back it up and just look at it like this. So you've got the last couple days. This is today, yesterday, day before Monday. You had buy side liquidity, right? You had liquidity. Are they relative equal highs? These are more close. They're not necessarily like the typical relative equal highs, but they're highs, right? They're levels that people could have placed stops at if they were trading, right? Um, Similarly to the trend line phantom idea, right? You've got in oil the retail trend line that's kind of formed almost perfectly, and people most likely have taken trades down here, right? So prices already ran out buy side liquidity, these highs ran into a PD array. So this is the same type of turtle soup movement, right? That we're currently looking at in GU, right? You've got that same type of oh, let's zoom it in over the last couple days, right? You had the turtle soup movement into a fair value gap and order block, running out these highs. Now you got the same thing today into a fair value gap and order block. Is too weak to touch it, running out these highs. And now you see the trade that I've taken. Price this um, 15-minute candlestick has closed in the midst of the breaker. Uh, it hasn't closed above the 15-minute fair value gap, which I may look at it. I have the 5-minute fair value gap, but it may be more important for me to pay attention to the 15-minute fair value gap. Anyways, regardless of which one you choose, yeah, let's make this a 15-minute fair value gap, and then let's look at it on that spectrum. Regardless of whichever one you choose, the thought process is that this is a bearish entry because you've got the turtle soup type of movement, run on liquidity, formation of a breaker high, low, higher high, um, lowest down close candle breaker, which on the 5-minute I have the lowest two down close candles, or I have the lowest down close here, right? The 15-minute fair value gap across from it, and now price looking like it's actually potentially giving me what I want. I'm keeping my lot size the same here because I just want it to be a practice entry, something that I can look back on and say, was this the right entry? Was it the wrong entry? Whatever. Um, if we were in the kill zone, which we're about to be in the ICT New York kill zone, right? He says 7 a.m. to 11, honestly, but for me personally, I like to do it more close to the news, like 8 a.m. to 11, 8 a.m., 9 a.m. to 11, depending on when the news comes in. But regardless, we're about to be in that kill zone. So I can take this as an entry, a higher lot size entry. Only thought process behind me waiting, sorry, only thought process behind me waiting is the fact that we have news that's coming at 8:30. But that news isn't Fed Powell or FOMC minutes. We do have some Fed announcements, but it's not terrible. So what I'm going to do is I'm going to test my theory by taking a slightly lighter lot size entry. Still going for that 30 pips. Now that I'm seeing my stuff being respected, entry is going to be right here. And we're still looking for this low, these relative equal lows here, which should be right in line. It's given 29 pips, but we got 11 lots on it. And that's just low hanging fruit. Obviously, you have the other targets, the fair value gap and whatnot. But if I could get my 3,000 here and not have to worry about any extra here, then I'm cool with that. So that's what we have going on in GU. And then I told y'all GJ, I ain't with it for various reasons. You can go back and look at that. Uh, Gold, I would rather, it come up to the crux, which is most likely would be way up here. I just don't think it's going to come way up here and then go way down. And then, yeah, you got a higher time frame trendline phantom type of idea in oil, which could potentially lose me 1,000 or potentially gain me 1,000, which I'm cool with. I'm cool with that. So when I'm demoing, I'm trying to literally, do exactly what I would be doing in a real market. my thought process behind me taking these two larger trades is that I would be doing these in two separate accounts. I'd have an account, God willing, for oil and gold, and hopefully that would be a larger account to be able to work with that money a little bit, and then an account for Forex specifically, so I could do copy trading and all that, kind of similar to how Jade Cap FX does, where he has like he uses the demo for Oanda and parlays that across all of his, you know, uh, trading accounts, funded trading accounts for Forex only pairs. So I would have two different accounts potentially that I could use to enter. And that way that would kind of spread my risk, right? I could have the same risk parameters because I'm either going to take a trade in gold or oil, or I'm either going to take a trade in GU or GJ. But those Forex and, commodity pairs, oil slash gold is different. They're going to be in different accounts. So God willing, that would be the way that I would be able to do both, but keep the risk down. So yeah, this would be a trend line phantom type of move. You had a run on liquidity, it's a similar type of turtle soup type of move. You could say you could put your stop right above this, for even less, right? I could put my stop right here and could increase my lot size if I wanted, but this is just proof of concept, right? I'm typically would put it above the fair value gap to be safe. Obviously, if price trades back up into this, you're like, yeah, let me take my money out. You know what I'm saying? It is what it is. And then low hanging fruit, 1700 would be a nice, especially if I were able to get both. What's going on, Liam? How you doing, brother? Especially if I were able to get both of the trades to go in the right direction. You're talking about two different accounts, but still the same amount of money coming to your pocket. It's nice. So yes, sir. Um, but yeah, I'm finishing up my analysis. I've got these two trades running. Like I said, demoing, just practicing, getting prepared to actually trade live once those funds come in, and obviously doing the challenges and whatnot as well. But yeah, just trying to proof of concept, putting my mind frame in the in the type of mind frame or mindset that I have to be in to be able to execute properly on these types of trades. And to me, these are higher probability trades just because you got to run a liquidity into a PD array using ICT's concepts. When you find that, it just is better. It just is. It just ends up being better typically. Um, so you know we'll have to see how it turns out. I'm gonna have to step aside from the charts um, soon so I can go and get to my meeting. But um, you already know. Liam still rocking with those funded accounts. I'm training right now, bro. Like I said, this is demo, and I'm really just trying to get myself in the right mindset to prepare for those again. I did one earlier this year. I think the account size was too small for me to be able to make mistakes. I think the 100. Appreciate that, bro. Appreciate that. I think the $100,000 account with TFT or like a FTMO is a solid account if you're trying to like if you know that you're ready but you still have kinks to work out. That gives you that leeway to like make mistakes and still get back in the game. That's what I had done all last year. I had demoed, I'd passed that challenge if y'all had followed me last year, and then didn't get the verification because I got on Twitter. I started getting distracted. So that's why, this past fall I retooled, and then I took a break from YouTube just to get my brain in the proper mindset for what entries I'm really keen on and trying to get myself right. But otherwise, it's kind of like me just saving my money up, you feel me, Liam, and preparing for that opportunity. Now, a lot of times when you lose a trading account, if someone lost a trading account, they get upset because you've lost, and it's that feeling of doubt in yourself, right? But for me, I'm trying to get out of that and actually be trading here. I'm trading live. If I get it wrong or right, it is what it is. But I'm trying to get myself into that mindset of this is how I'm going to have to perform in the markets to get it right, to get the trading challenge, passed, funded, verification or whatever passed. And even when I get the account, because a lot of people get the account and then they go wrong. No, I want to be, even when I get the account, I'm doing the same thing. I'm taking my moves the way I need to. And you feel me? Whatever happens, happens. I'm not too emotional about it, and I'm using my risk management, which I didn't have last year. I'm using my risk management and making sure that I'm not trying to get rich off of one trade, and therefore I'm not trying to risk too much. You know what I'm saying? So that's where I'm at in my mind frame. I'm hoping, God willing, this fall I can be able to get into some larger accounts, and also I'll be able to ride that trend of potential bullish, seasonal tendencies in pairs that are compared to the U.S. dollar. So we're talking GU and gold. Um, but yeah, yeah, man, that's what it is, man. It's that demo. People. It's not flashy. You know what I'm saying, Liam? It's not flashy or anything, bro. But it's one of those things that's kind of like you got to do it. You got to do it in order to be successful, and you have to do it well, right? And then I've gone live and then come back to demo, gone live and come back to demo. So it's like you got to let your pride go too, right? And just demo correctly. You see, I'm doing this as if I'm actually trading, and then I'm even looking into it as like, okay, I'm gonna be at work. I'm at work right now. I'm gonna have to, take the proper trades, the most probable, high probability, put my stops where they need to be at, and then I need to just be able to live with the results, especially if I'm not able to look at it, right? So that's where a U.S. oil type of trade here, you know, it allows me to kind of get into that higher time frame type of trade that I could potentially watch over time. With GU, I'm more of a lower time frame, get in, get out, which is why my stop in GU is set to be pretty low. It's like 30 pips, right? So it's like I'm really just comfortable with that. Um, but the GU trade is looking solid right now. When that news comes in the market, we'll really see what happens. What you say? You said demo is so important. Most people skip it. Demo is so important. Yes, sir. And if you aren't profitable on demo for 5 6 months, I would never consider exactly. And that's like after studying for a year minimum. Facts. So let me tell you, I studied for a year under ICT, 21 to 22. I'm still in his private mentorship and all that. I'm still studying. I'm always be studying. But I studied for a year, all of 2021. Into 2022, I took that live account and I did 5 months of successful. I'm gonna say 3 months of successful trading. The first two were a little bit wild, but I came into my model. I came into what I wanted to trade, and that was very helpful. And I needed to do it in live so I could prove to myself that I could freaking do it. You know what I'm saying? So I could prove to myself that I could do it. And once I proved to myself that I could do it, I took those mistakes that caused me to not. Uh, I passed the challenge, but not pass the verification. I took those mistakes and said, I'm gonna retool and I'm gonna demo from basically October to like uh February. I took another funded account, 50K, and with the 50K, just you can't make too many mistakes. I made a couple mistakes, and I got out of my trading model. Instead of just sticking to it, lose or win, I stick to my model. Now I'm at that point where I'm like, okay, I'm a little bit more matured. It's been 2 years since I've been studying with ICT. I have demoed for over a year now, if you combine the different times that I've demoed, because you could consider that FTMO challenge, live challenge, a demo, because I didn't get the live account, right? So that's a 6 month period. Then you got the year before that, studying and demoing all the previous year and getting it right. And now, finally coming into where I feel like I know where to pick and choose my spots. And now it's just about once I get that one trade that week, I have to tell myself to stop, because it's like if I get $3,000, let's just chill. Why do I have to go and risk more? I think the part that makes me risk more really is that challenge, because I'm trying to beat the challenge. So what I'm focused on now is maybe looking at challenges like TFT. They're going to a challenge that they don't really have. They're not going to have time limits on the standard challenge. I love that, because how can you tell a trader, that they're supposed to be able to make this amount of money in 1 month? Yeah, a lot of people can do it, but a lot of people, like, that's what gets them in trouble, is because they're trying to take these extra trades to get to that mark. And it's just sometimes you need, as a beginner, you need that time to take your time and pick and choose the right spots. He said, in my opinion, if you feel scared to enter trades unfunded, for example, I feel that you are probably not trusting your own model, and have done too little demoing. That's facts. And I think that's where I was at in 2022. I didn't have a model. And doing that FTMO challenge, though a lot of people say don't do that before you've demoed, I demoed and I thought I had a model, you know, But when I got into that challenge, I found out what my real model was. I found out that the breakers is where I like to focus. Run on liquidity, turtle soup, breaker, uh, 12 a.m. open, Asian range, using all that as confluence. But I'm really focused on the run on liquidity and the breaker. That's where I'm at with my model. And then I frame all of that in the market maker model to give me extra confluence, right? This is the market maker model here. Run on liquidity, first leg of distribution. These are both the same area. Second leg of distribution, right? But I'm framing that in line with all the other stuff. So I have my model now, but I didn't. You're 100% right. I didn't have it, and so that's where I would take certain trades, and wouldn't understand, why is it that this trade is going well versus not with the other ones. But at the end of my 6-month run with FTMO in 2022, that's when I really came to understand. Okay, this is my model. Let's focus on it and let's master it. Add confluence to this. That's why now every time I listen to an ICT video, is me adding anything that I can add confluence. When he talks about his new week opening gap, I only use it to add confluence. You see it's not on my chart right now, but I use it to add confluence to my trades, right? And if it's a concept that's like, for example, his silver bullet, I'm not. I'm paying attention to it when it's my model. The silver bullet could be, the breaker model. It could be, turtle soup. It could be a number of different things, but I'm only considering using it. For me, I'm not even framing my mindset in it. I'm really just focusing on looking at price in terms of run on liquidity against the higher time frame bias, breaker forms in the direction of the higher time frame bias. I'm in there, obviously within the kill zones. You know what I'm saying? So you're 100% right, man. And that's why I've decided, for myself now, even though I have my model, it's even more important for me to demo now to prove proof of concept that I know what I'm doing with my model, me personally. And then the other big thing, and I thought helped me out a lot, was identifying. A lot of times I was taking trades and my profit target was way too big. 20 to 30 pips. If I can do that twice a week, that's going to make me more money than it is me trying to take a 50 pip trade twice a week. Um, Question, you said, do you trade any other stuff than what's in the top right in your watch list? No, I don't. I don't. And the reason being is what ICT says about identifying, like, yeah, you identify your model, identify your pair, and become a master at your pairs, right? So the one that I really love is GU. That's the one that I have not never will say I've mastered it, but I'm more comfortable with it than anything else. GJ, I would say I'm next. That's my next most comfortable. And then you got gold and oil that are really just me testing out my theories on it. um, Oil being the newest one, right? So I think I want to have Forex and I want to have non-Forex pairs. So you got gold and oil, and these are both kind of two, different types of pairs in themselves. Um, but I'm focused Forex on GU and GJ to give me the most bang for my buck. I can use the London and the New York session for both of those, and then gold and oil. They're both pairs that are linked to the U.S. dollar, so everything correlates to the DXY. I don't trade the DXY. I just use it to correlate my trades and look into how I can add confluence. Obviously, if one goes up, then the others go down, right? So um, focus really on GU. That's where I make most of my trades, and I'm trying to figure out, only taking my model specific type of trades after a run on liquidity within GJ, within oil, within gold. Trying to just fall into those, easy, low resistance liquidity run type of trades for those pairs. I appreciate all the questions, bro. Appreciate it for sure. I'm about to hop off, y'all. Um, I will be trying to do well, I won't say what I'll try to do. We'll just do it, and then hopefully, people will join. But I'm God willing, making a habit of doing these live sessions, showing live executions, and being present to the market. Um, tape reading and all that. But a lot of people about to come into the office, so I'm about to end my stream. But much love to y'all. I really appreciate y'all hanging in, and I pray the best and the most blessings for you all. In your trading career, like just keep going, keep doing what you're doing. Demo if you need to. Save your money up and be confident once you find your model, man. Just execute to the best of your ability, and remember what you're doing it for. You're doing it for yourself, but you're doing it to change the lives of your family, friends, all that stuff. You know. You said 1 minute 04 EST. All right. I don't know exactly what that comment means there, Liam. That last comment. I'm not sure. But yeah, I think I'm gonna call it a day. Uh, if y'all have any other questions, just throw them in there before I finish up. But I got a meeting soon, so I'm about to go get the room set up for that. Yeah, okay. I think that we are good. Oh, he was saying, I was just saying that I took a clean demo trade today on GJ, and she was 1 minute chart. Got it. GJ was clean today, London low of the day. Yeah, I got it. Oh, that's interesting that you took that. I would be interested in understanding what you said. Let me look at that time stamp. So about 5 a.m. Okay. So you basically did take that break and run on liquid. Yeah. And in there in the weeds, brother. I like that. Oh, all right. Yeah, let's look at your trade real quick. All right. So 457. Yeah, you basically looking at that higher time frame breaker here. Low. I mean, I'm not saying this how you looked at it, but if I were looking at your trade, this is how I would look at it. Um, if we go back to the 5 minute, that's basically right here. Pull into that right there. I like that. Breaker, low, high, lower, low. Fair value gap, run out liquidity. How many pips you got on that trade? I like that. You nimble, my brother. You in the weeds with it. 20, 25 pips, 30 pips. Yeah. In and out. I like that, bro. Yeah, that's a nice trade. See, me personally, I respect that you took that trade. I was just looking at the overall with the GJ and the fact that you kind of in that little range. Now, I do like the fact that you fair value gap. I mean, you probably are going to be bullish. So it's probably safer to take a bullish move, but you do have to be nimble. That is a perfect example of when there's all this stuff going on, you have to be nimble in order to take a solid trade, and that's what you did. So I like that. Yeah, 20, 30 pips. Yeah, that's what's up. Yeah, that's good stuff. So you trade GJ too. That's what's up. Yeah, if you're gonna take a trade, you got to be nimble and be able to identify that. That's real nice. Much respect to you, sir. All right, y'all. I'm about to just say it. Oh, he said I traded GJ for the first time today. All right. shoot, if you keep training like that, you good. You just got to make sure that you on the right side of things. You still had liquidity to reach out to, so you was straight, and you was coming off of a run on liquidity in the opposite direction too. So okay, so you mainly trade S&P 5. Okay, yeah, yeah, yeah. I would keep trading GJ, bro, because it'll give you that forex pair, that you can trade alongside your S&P 500 and Nas 100 stuff. Um, but yeah, keep doing what you do, man, and don't let nobody tell you otherwise, for sure. All right, I'm gonna call it a day. Appreciate y'all stopping by. Now to start the real work day. All right, we ending it.